Hey, it's Jack from Alphacharts with a state of the market video. Today is April 6th, 2024. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. Now, we hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, so thank you all for watching the video. If you like it, please like and subscribe to my YouTube channel. As always, I'm on X at Alphacharts365. Um, you can I run all kinds of information through there for free, almost every single day. If you really like my stuff, I get much more in depth with my educational subscriber group. It's $10 a month, but for that you get a special weekend video, midweek video. You get a market note on the weekend and also in the midweek, right, to kind of keep you engaged in the market without having to do the hours of research. You get somebody that kind of to trade with alongside of to bounce things off of. It's really, a high-end subscription service, but only for $10 a month. So if you're interested in something like that, please check me out at AlphaCharts365 and just click on that subscribe button. It's month to month also, which is even better. There's no like you have to sign for the year or quarterly. You try for a month or two, you love it, you keep going. It's not for you, you cancel. It's really no big deal. Um, but it's worth a try. So check me out over here, subscribe. All right. State of the market. Looking at the SPY. This right here on Thursday, 4-4. This was a take notice day right there. Um, we tried to push higher and totally reversed and closed in the lows. Now, the next day, there was a bounce back day up 1%. Great, wonderful, lower volume than the prior day. And it's just an inside day. This is a lot of indecision, a lot of question marks right here. And you have some mixed signals. You have rising 50 and 200, positive long-term signals, and you have the flattening to declining shorter-term moving averages. Again, there's your mix. So I guess my point here is caution. This is a cautionary bar, period. So let's see what it was for the week. On the week, we were down 0.9, so almost a whole percent on the week. And then looking at the RSP, 1.77. And you see RSP here, say on the weekly, is basically retesting its breakout. So that's a big spot here for the equal weighted S&P/X, right? Equal weighted SPY. This is a big spot. If it doesn't stay above, 160, we'll call it 164, go back to the daily. If it doesn't stay above, this 164-ish or so, which is right where that 50-day is going to be in just a few days. I mean, that's a big deal, right? Let's just zoom in here. Right? So that's a big deal. This 160, 164, 165, somewhere, which is the pink zone. Also, going back to the SPY, I forgot to do this, but there is let's take a look here. You can kind of see it on the SPY. You can see it better, actually. It's hard to do here. There is a divergence that has developed on this index and even more the Qs. Look at that. So, and the Qs look much different than the SPY. So what does that talk? Let's talk about that for a second. For me, this shows obviously the SPY, which is a little bit more diverse, is holding up better, and the Qs, which already has declining 9-day, a flat basically 23-day. It's sitting on the 50-day. It's gone sideways since 222. That's right around what, 5 weeks or so, roughly, maybe 6 weeks now. It's gone sideways, and you see from the VWAP, the VWAP is literally horizontal. Again, same inside day. It did bounce back a little bit better, but again, nothing, still in this general range. And the Qs, if it loses 433, that's a problem because that would be a decisive close below the 50-day and it would be underneath this prior support band. So that's a big deal, right? You have to, and you have negative divergence. So a lot of stuff going on the cues. And on the week, this was down 0.78, but again, still within a range technically, right? So that's why like I can't get bearish here because nothing has happened except, we had this nasty bar right there. So, but on the weekly, it was down 0.78, and the equal weighted, which has not broken out yet, right, was down 1.69. So much worse. Again, equal weight. So it just shows you people are selling across the board. Again, the equal weight has not broken out yet. So that is still an issue. And it did close right at, but below the 50-day, and you already have the cross on the short-term moving averages, and you can see the equal weighted Qs are in much worse position. Again, cap weighted has Apple, Microsoft, Google, Meta, all Nvidia to really hold it up. Amazon. This equal weighted doesn't, right? They're in there, but they're no different than anybody else. Anyway, so that's a big deal, I think. And unless we retake these averages quickly, like next week, um, very likely we're going to come back and let's just pull this right across here, right? This was our prior line that was important. And you know what? Don't be shocked if we come back down here, right? I mean, on 8%, that would be normal market action, right? 8% pullback after a big run. Okay. So that is, to me, that's where the risk is, basically getting close to this $81 area on the Qs. Again, technology type names may be weaker going forward than other parts of the market, rotational market, right? That's what this is signifying. Looking at the mid caps, my faves, they were up 0.79 yesterday, but had a real nasty day on that Thursday, down 1%. You see, holding up better than some, again, not close to that 50-day at all, which we saw other places were, down 1.81 for the week, so not a nice week. And don't be shocked if we come back and retest this 535-ish area on the mid caps, right? That would make sense to me. But that would be normal bull market price action. Now we start breaking below that, and that's a problem. And looking at the IWM small caps on the weekly, down 2.79, pretty nasty week. Looking at the daily, above the 50-day. So again, it just shows you how bad the RSP, the equal weighted Qs are, right? Below the 50-day already. Again, still not looking great though. This 200-ish area, that is, I think, the important area right now to hold. May undercut this 50, maybe 201, right? Maybe a little undercut, and then if it retakes it, that'd be fine. That would still be very bullish. What we don't want to see is a breach below this 200 area. I think that, getting below the 50-day moving average is never a good sign, ever, unless you're shorting. Here's the financials, who were doing amazing, had this breakout, and now it's kind of holding up sideways in this range. Here comes the 50-day of we're at $40, 40 and a quarter. These were down 1.33. Again, didn't break the support area though, so that's really good to see. Let's look at SMH on the weekly as well. I mean, just tight weekly closes, right? Again, this is the Nvidia effect, and we're gonna I'm sorry, I want to go back to weekly for a second. This was down 1% for the week. And you see, it looks like the Qs a lot in a lot of ways, because this just has gone sideways. I used this one because it was a high volume day, but really you go back, and it's really gone sideways since, for about 5 weeks or so. Hasn't broken out. This was the Fibonacci extension, one of them, but it was the one that made sense because it was this whole move right here, right? So there's your Fibonacci's. It went to the 1.618, and now it's retracing. Where does it go from here? We'll have to see. I don't like this way this looks. It looks more distributive, like a lot of the charts do. but I'm not, but it's still above the 50. So anyway, so we had that. This is holding up well, but looking at the equal weights, let's go to weekly. This is the equal weight semiconductor index. So it was trying to break out of this area, and actually, not it doesn't look terrible. It was down 1.54. I thought it'd be down worse than this, than that. Um, but down 1.54, and on the daily, you can see it's still above the 50-day, which is now really flat. I mean, this hasn't done anything for more than a quarter. Pretty amazing, actually, right? 4 months, 5 months, something like that. Um, it's gone literally sideways, and you can see that right in the 50-day, right? See, that's flat 50-day. That is no trend, and we have kind of a big, you know, I mean, you kind of draw something like this. I could draw something like that. Kind of a broadening pattern in here. Not perfect, right? So I could also draw it like, I guess, like this, right? And say it's in a channel, right? So, and I actually like this better, more, I guess, more touches. Anyway, either way, this is equal weighted XSD and doesn't give me a lot of confidence that this wants to move higher yet. We'll see. We'll see. ITB, home construction, uh, holding up well, but again, has a very similar look to it. The 50-day is at 107. That's an easy potential area, and could even come down to this 103-ish. That would be very possible as well. Same thing, XHB, not that much different. Looking at transports. Transports on the weekly. Let's go to the weekly because you can see this a little bit better. Here's the weekly on transports, and they just could not break out. Now it's been 1, 2, 3, 4, 5, 6 weeks, 7 weeks. Could not break out. Had a pretty nasty, 1.55 week. Not a good looking week. Did close above the 50-day, but they're all bunched up, and won't take much for this to undercut the 50. So, they don't look all that healthy, especially into this resistance area, which we knew was coming. And then the equal weighted transports, they had this long-term downtrend line looking, let's go weekly, right? It's kind of long-term, they were down 3%. Wow. And still having issues with it. And as you can see, is right there, bunched up, all the moving averages together. There's your 200-day. Looks like, the 7950-ish area is probably going to get tested. And then, we'll see what happens. So overall, the market is looking very cautionary, very like, just be a little careful out there. Let's look at the internals. We had a VIX spike. That's a big deal, right? We had the broadening pattern, and it really, when it was down here, it was like, oh, well, maybe this is not a big deal. And then it was just an undercut and a boom. Now, 1650 is my arbitrary line in the sand. I think 1650, somewhere in here, right? I could probably put another line at 16. Above it, and it's a much more volatile market and very, very, almost bearish in a lot of ways market. But below that 1650, and I think that things are still pretty good. We're right there. We're right in that cautionary zone. And so that the VIX is confirming what we're seeing in the charts. Let's go to credit spreads. Are they blasting higher or not? I don't know. So they're not blasting higher, right? So this is most likely telling us it's a run-of-the-mill pullback, not like, this, like we're going to enter some kind of weird bear market, run-of-the-mill pullback, and, maybe 5-10%. And if you're a long-term trader, great. If you're short-term discretionary, take some profits, check your stops, and all that kind of good stuff, right? Looking at percent stocks above the 50-day, I still think that we need to get down here. And a 5 to 10% pullback would get us there. And that would be the reset I think we would need. Looking at put call ratio, we have this kind of move higher. I would love to see a spike up here. That would be confirmation, especially with the breadth deterioration and maybe a spike in the VIX. That would all kind of coincide and should really. And that could kind of help us mark maybe a bottom, whether it's long term or short term. We don't know, but that's kind of what I'm looking for there. Looking at, let's look at the dollar. DXY, we are seeing this 105-ish area being very, very important. We did pull back, but if we break out above there, that could be a problem for the markets. And if we break out there, the next level would probably be this 107 area, right? Yeah, that just makes sense to me. This 107 area. You can see how this big downtrend line, started to bust above it, came right back to it. We fall lower. That's very, bullish, I think. But if it breaks out, I think we get to this 107, and then we'll see what happens. But that move to 107 maybe what helps create the catalyst for the next, maybe leg lower if it happens. The 10-year yield, looking at that. This doesn't tell me that they're cutting rates anytime soon. The 10-year going higher means people are probably buying bonds, right? So anyway, I'm sorry, selling bonds. They're getting the yield. So they're selling bonds. But either way, this does not tell me that the Fed is going to cut rates anytime soon because rates are going up, right? You would see, I think you would see the rates going down if they're anticipating a rate cut. Just my 2 cents on that. And then let's go into then I think that's good. We'll stop it there. So anyway, but sum it up real fast. Cautionary bar. I think that the technology names are you should be very, very careful with, especially the overweight mega caps. This is my XLK SPX chart on the monthly, and you can see how if I do on the weekly. We got to this point. Monthly shows it better. There you go. On the monthly was monthly closes. You got to that point. You pull them back. An area to pull back to might be this 0.0372. I don't really care about the number. I care about the spot, right? So that could be a place eventually over time. And again, this is a monthly chart, so it's going to happen maybe over years. But a pullback into that area, that could be support, and then you may actually get that nice, beautiful rotation back into it. So anyway, short term, tactically, I think we should be cautious and take some profits if you got it. There's nothing wrong with paying yourself. If you like this type of analysis, if you want more of it, if you want individual names to trade with setups and where I think a good buy spots are, where I think where we would manage risk or sell, right, if we're wrong, would be check me out at Alphacharts 365. Click that subscribe button. It's $10 a month, and the value you get is pretty intense. So thank you for watching. Have a great day.